Hello guys, what's up? Nice to meet you guys one more time. So today let's have a chat. Let's have a chat. Don't Let's have a chat. Today is not scripted. You know, let's talk about why it's so difficult to make money with Forex. So difficult. Probably you are watching me and you came into Forex with a lot of hopes and aspirations. You thought you were going to become Elon Musk in 1 year. You are now like 5 years into trading and you don't have anything to show for it. You don't even know whether Forex trading is real or not, you know. So today let's talk about why Forex trading is so difficult. And I'm not going to say it's so difficult for some people, because even for me it's still difficult, okay? And although I have been able to become consistent over some time, I still face some of the challenges many of you face. You understand? Just that maybe it's to a lesser extent. You know what I mean? So let's just have a friendly, tete-a-tete, friendly banter. Why is Forex so difficult? So I'm going to tell you what I think. What I think, okay, is at the end of the day, it's just my opinion, okay? It's just my opinion. So the number one thing that I think makes Forex trading very difficult is just our human nature, the fact that we are humans. Yeah, the fact that we are humans. So, Forex trading has a way of exposing your natural tendencies. So if, let's say, you're trading Forex and you're a greedy person, it's going to be very evident that you are greedy. If you are fearful, it's going to show. So most of the time the human emotions get in the way. To be completely honest with you, Forex trading shouldn't be difficult. And here, when I'm talking about Forex trading, I'm talking about like trading in general. It shouldn't be very difficult at all, because it's straightforward. It's either you're going to buy or you're going to sell. You understand? But the human emotions gets in the way, and we are not robots. So sometimes you feel happy, you feel sad, you are confident, you don't have confidence, a barrage of emotions. So it makes trading very difficult. For instance, one thing that really hampers our performance is the tendency for us to be hopeful when things are bad. Okay, so let me give you an example. Let's say you're trading, right? And then you are in losses, heavy losses. All of a sudden you become very hopeful that things are going to change. You think the losses are going to reverse, and then most likely the losses don't reverse. It even gets worse, it gets deeper, and then you realize you are in deep shit. Okay, now instead of closing the trades, even if you have stop loss, you are going to take all the stop losses, because I'm good. Yourself? You are going to take all the stop losses from your orders and then just sit down and hope that the trade is going to reverse. I've seen this happen countless of times. It has happened to me severally, you understand? And the worst part is that it gets to a point where now you begin to regret your decision of holding the trades. So you'll be like, okay, now I'm in a loss of $6,000. But the loss, I saw the loss when it was $200. I could have closed it at $200 and I wouldn't have been sitting on this mess. You understand? So, and even as at that point, when you come to that conclusion, instead of closing that loss, you'll still be hopeful that it's going to reverse. Understand? You'll still be hopeful that it's going to reverse. And then now the loss gets to $14,000. And now you are like, okay, if I had closed it at $7,000, it would have been better off. And you still hold on to the trade to the point where your account gets wiped out. You understand? Another side to this same scenario is that when we have profits, okay, we tend to be eager to close the profits quickly. Because you are thinking, you know, let me just hold on to the little I've had. You know, as for the market, you can't really predict what's going to do. So you hold on to, you quickly close the profitable trades, even when they've not reached their TP. So you would see, when you check most of the traders' trading history, you realize that their losses, okay, their losses are bigger than the gains, or let's say in pips. So you see that they're able to hold on to a loss of, let's say, 500 pips, 600 pips, and then it's closed. But when it comes to like the profits, once it gets to 50 pips, 70 pips, 100 pips max, then they close. So what tends to happen is that your losses become bigger and your wins are much smaller. You understand? So this is really critical. I mean, that's why now people are moving to like trading with robots and all that, because robots you don't have to worry about some of these emotions. You get it? Now the second thing I want to talk about is how do you call it? Let me say poor training. Okay, yeah, poor training from the so-called Forex mentors, and I mean, what have you, brokers and all that. Poor training. I would even go to, you know, one more step and say fraudulent training. You understand? Yes, by not all the brokers though, but majority of them, like 80%, 90% of the brokers, they are giving you shit training. You understand? Yeah. For obvious reasons, because they are running a big book and their prayer is that you're going to lose money. So if they want you to lose money, then why would they teach you something that will let you make money? You know, it doesn't make sense for them. So they are going to teach you about certain indicators. When you see this and this candle, okay, the candlesticks I think is okay, but they like the indicators. When you see the stochastics here, and you see this green light on this indicator, then you buy, you know. But truth be told, if life was that simple, we will all be millionaires. But you know, trading is not that simple. It's not that simple. So you know, the Forex mentors also try to sell you lots of shit materials. Some very expensive. You buy them and then you learn, and then nothing comes out of it, you know. And the thing is that these Forex brokers have partnerships with some of these online Forex gurus, and they pay them for as many, you know, people that you can bring. It's not wrong in itself, but for me, if I am going to refer someone to a client, and I am training them, I'm responsible for training. At least I want to train you on how you can be profitable, okay? But in some way, I don't also blame the Forex, online Forex mentors and all the Forex mentors, you know, because they themselves, they probably don't know. Yeah, they probably don't know. So it's like that. They probably don't know. So they teach you all sorts of things, and then you go, and then you know what happens. You end up losing money severally. It doesn't stop there. and then you enter into this I call, shithole. You fund your account, you lose the money, everything. You go and look for new money, you fund your account, you lose. You go look for new money, fund again, and the cycle repeats, it continues. Okay? And who is benefiting? Obviously the broker. He's happy you are depositing. And with like human emotions, we always want to fight back. We have this tendency to revenge. So we want to revenge, want to get our money back. Gambling mentality. So, and what happens? Ultimately, you lose everything, and then you don't have any money to put in the account, and then you become, you have despair, and then you are sad, and all hope is lost. And that's been the story of so many people. You know what I mean? So, these are some of the things that makes trading very difficult. Very difficult. I struggle with some of these things even to this day. Of course, to a lesser extent. But since I'm human, all these things still, come into play. And then, the other thing I want to talk about is closely related to like poor training. Is that the things that move the market? Okay, let me say all the factors that make the market move is a mystery. Okay, and it doesn't mean maybe some of you are freaking out like, okay, if you don't know everything that moves the market, then how can you make money? Okay, but no, that's fine. You don't need to know everything that moves the market to make money. Okay, yeah, but for instance, if your strategy is able to let you predict 70% of how the market is going to behave, then I think it's a good enough, good enough strategy. So even to this day, sometimes I place a trade and then I just don't know what happened. Okay, you check all the news feeds that happens, all the news feeds that I use on my portal, my terminal. And there's nothing that suggests that there's nothing that should affect that particular currency. You check technical levels and there's nothing. You understand? You check other stuff, sentiment and all that, there's nothing. And you are puzzled. You don't understand what's happening. So, things like that. Things that really move the market. Some you think so you talk about technical, you talk about fundamental, you talk about sentiment analysis, but trust me, there are so many other things that move the market. Thankfully, I've been able to discover majority of them. I can say with certainty I've been able to discover about 80 to 85% of the things that move the market. Okay, definitely I can't understand everything. No, it's impossible. I can't understand everything. You know what I mean? So this with what I've talked about, and you don't need to be so confident that the trade that you've placed is surely going to play out. And if you have that in mind, then it means you are going to use a sensible risk management framework, which is what I'm going to talk about lastly. The other thing I want to talk, the final thing, then I end this video, is, how do you call it? Not understanding risk properly. So I think that not being able to understand what kind of risks there are with the trades you are entering is very, 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 detrimental to the success of most traders. You need to understand how to position your lot sizes. You need to account for even the factors that you don't think is going to happen but could possibly happen. And also try to make sure that all your trades are high probability trades as to the best of your ability. Okay, so for instance, a strategy I like to use is confluence. So what confluence basically means is that you place a trade and your setup is made of, let's say, your setup is made of two strategies. You know what I mean? Two strategies. So let's say for the purposes of this video, let's say you are using technical and then fundamental analysis. So technical analysis is a different strategy compared to fundamental analysis. So we can say that these strategies are not correlated. They are not correlated. Okay, so ideally you want two strategies that are not correlated. It means they don't have a bearing on each other. Technical can show sell, fundamental can show buy. Okay, but when they are all showing the same direction, if they are showing sell or they are all showing buy, then it gives you a higher probability that the trade is going to work out. Okay, so even this can be proven, you know, like statistically. If you have two things that are pointing the same direction, the likelihood that at least one of them is going to happen is higher than both of them. So let's say if your technical analysis has a 60% chance of playing out and your fundamental analysis has, let's say, 70%, then the two of them combining gives you a probability of, let's say, higher than 60 and then 70%. It can give you like 85% or something. I mean, there's a way to calculate that. So if you have a trading strategy that's giving you 85% chance, it means that, you know, out of 100 trades, there's a probability that 80% is going to play out. And these are how like profitable trading strategies are formed. You know what I mean? So everything boils down to, you know, trying to get training, and then training yourself, trying to understand the nature of this market, and then how we can circumvent some of these challenges that me and you face. You understand? Yeah, so that's about it. Hope you guys liked the video. If you watch up to this point, then you should subscribe if you haven't, and then click on the notification so you don't miss out on future videos. So the next video I'm going to talk to you about my trading diary. My last big trade was a USD South African rand. So I'm going to teach you my strategies and how I trade the USD South African rand. It's a powerhouse. That's that currency pair has been very good to me, you know, since my days when I was working like 8 to 5 till now. It's been really good to me. It's made me a lot of money, tons of money. So I'm going to talk about the USD ZAR and how to trade it. I call it like the beast, in the sense that it can do you good and then it can also harm you quickly. So you have to trade it with caution. Yeah, so I'll talk about that, and then we can you can I mean, see how that's going to help you. I mean, I want us to grow as a community together, helping each other. I don't know everything, so there are things that obviously I'm going to learn from you guys, and together we're going to build a great trading community, and then try to make money online. So that's about it. Thanks a lot, guys, and I'll catch you in the next one. Peace.